2010 and 2011, we're looking at roughly a 10% growth between those 2 years relative to 2009. So the industry is poised for recovery. We're starting to see some indications of that already. So back to double-digit growth over that time frame. What we're saying is 6.5% growth rate on an average annual growth rate basis between 2009 and 2014. The industry in general, we've got it about 5.5%. Now, another point that I mentioned early in the presentation that was really helping drive PVC resin price increases was these alternatives to the domestic market. In other words, the export market that has been so strong for PVC. Now, many of you have seen this in the past. This is our PVC scoreboard, where we chart sort of major metrics in the PVC industry. For example, if you look at domestic demand there, you can see that the 08 versus 09 change there was a -7%. Export sales, on the other hand, increased 33% in 2009 versus 2008. This has everything to do with our relatively very competitive ethylene production costs, which allowed producers here to make PVC with our natural gas and ethane-based economics at a very competitive rate versus those others around the world that were relying on naphtha-based economics, and even the Chinese who were using their acetylene or carbide-based technology, and allowed the U.S. producers to have a very strong market in China and other parts of the world. So we saw a 33% increase in exports last year. We went from about 2 billion pounds in sales to about 2.6 billion pounds, and we're forecasting an even larger increase this year, getting closer to 4 billion pounds, 3.8 billion pounds this year, and in 2010. So a very strong trend for exports. One of the major reasons that exports surged ahead was that China really got into the, really accelerated their imports. You can see the surge in imports from China in 2009 in this chart. Now, this is not just imports from the U.S., this is imports from all around the world into China. And you can see that in 2009, they imported PVC at a record level. Now, this happened for several reasons. Basically, the Chinese had instituted, and you probably heard about this, a stimulus program where they committed almost $600 billion to the domestic economy to stimulate the economy. Much of that industry went into to businesses that were melting plastic pellets, including PVC, for the burgeoning domestic economy there. So that really did benefit the PVC consumption there. In addition to that, the Chinese had really driven their inventories down to very low levels at the end of 2008. So they were really replenishing their inventories at the beginning of 2009. So there was a real shot in the arm, a real incentive to import a lot more product in 2009. And the U.S. producers were very well positioned to participate in that market with our low cost. You can see that impact here. This chart represents U.S. exports on a quarterly basis of PVC going back to 2007. And what you'll notice here, if you look at 2007, we exported about 15.4% of our total PVC production from the U.S. In 2009, that was up to more than 20%. Now, what I'd like you to take note of is the red section in these bars. That represents exports to China. You can see the big ramp up of exports to China. So it played a very big role in this. And we expect these imports, or these exports to China to remain. Our view is that in 2010, exports of PVC will represent as much as 27% of total produced in the U.S. So again, alternatives to the domestic market will help keep operating rates higher, help keep pressure on the domestic market, and help producers keep prices at a higher level. We've been following PVC exports on a monthly basis, and what's happened is a lot of the producers and distributors have been doing the math. They've been looking at what's going on, and they said, you know what, the U.S. is well positioned to provide product into these export markets for a while. They've invested heavily into some of the logistics chains, and in fact, we saw PVC exports in January really break every record in the books. There was nearly 450 million pounds of PVC exported in January. Prior to that, we were looking at highs at around 250 million pounds. Now, what happened after that is ethylene got constrained. What happened? Ethylene got constrained, and we immediately saw a reduction in February. But we saw a little bit of a bounce back in March, and we think by the time May and June rolls around, we'll start seeing some big numbers for PVC exports. You can see that represented in this chart. So again, as much as 27% of all production will go in the export market. So some takeaways here for the PVC presentation, or piece of the presentation is, although nameplate operating rates have been relatively low due to some of the constrained production that we've been talking about, effective operating rates have been quite high. Producers have been making every pound they can. If you're back integrated all the way to ethylene, you're loving this, and you're absolutely making every pound that you can, and you're selling every pound that you can. Ethylene prices are high. We think availability of ethylene will remain tight through May, at least. Producers will be challenged to retain prices and margins when this tightness abates. Again, we think ethylene will stay tight into May at least. As we've said, there's going to be an increased reliance on the export market due to logistics capacity investments that we've talked about and favorable U.S. production economics. Domestic demand, we're happy to say, appears to be on the rebound as well, whether it's the stimulus program, whether it's these incentives to buy new homes or whatever. We do think that the market has bottomed out, as we said, 10% growth in the next couple of years combined. But on the other hand, we've also said PVC is now in a position where it's going to be carrying more of the economic burden, more of the margin burden for the entire chain than it has been in the past. It's just not going to get that support. Now, if you're a fabricator of PVC, the reality, as I've said, of PVC prices is really here to stay. You may see a little bit of dip here as ethylene prices move or chlorine prices move, but the trend is going to be up. So if you haven't moved your prices up and you're expecting them to return to levels that you saw in maybe early 2009, that's just not going to happen. The fundamentals are not there. There's going to be continued volatility in the chlor-alkali side. We're telling you, please, watch energy prices, watch ethylene. If you want to be a savvy buyer, certainly watch chlorine prices as well, chlor-alkali prices. We didn't really get a chance to talk about this, but there's some pending PVC capacity increases that are going on out there right now. Shintech has announced some increases. Formosa's announced some increases. All of this should help producers be relatively motivated to work with buyers. So keep talking with your suppliers here. You may have a little more leverage than you might have thought. And finally here, we think demand should be on an upturn this year. The worst is behind. Last note here, the industry has consolidated some. We don't think it's behind us yet. Could be continued consolidation on the forefront. And I think that was my last slide. I'd be happy to take any questions. Yes?
Hey, I like the idea that you're projecting higher demand. I think that would be really great if we could accomplish that. But there might be some factors that might drag us down a little bit, like the stimulus package. When that goes away, and high debt, high taxes potentially coming from the high debt. So if we don't have higher demand, your basic premise was that prices are dependent upon demand, and therefore if demand is down, why do we have higher prices right now? I'm wondering if the industry has to maintain that kind of system, because in a supply and demand model, there's a cycle. If demand goes down, prices go down. When that happens, then supply goes down, prices come back up again. Our industry seems to have been predicated on the idea that optimizing prices requires higher volume. Economies of scale from production then produces higher profits. But if we're finding that's not the case over the last several years, could it be that the industry would